during the whole day. So yeah, let's start the trade review and see what we have right there. Let's see what we got right there. This trade I'll get back later. This is Ivan's trade. He'll not be attending this trade review, so he just emailed me his trade and we will review it later. I will definitely take a look at that trade, Lynn. I mean at that stock. Just remind me before we are done with the trade review, okay? Let me screenshot your thoughts so that I don't miss them later. Perfect. Now let's start here. B-Tank, and B-Tank traded INO. On INO, you traded a breakout. Let's see what breakout you've taken. Wait, that wasn't a breakout, right? That was a reversal at the beginning. Then you have taken a breakout. Or another reversal and another reversal and another reversal, right? Okay, the fourth trade was a breakout. Okay, so the first one looked like a parabolic reversal to me. You wanted to get in for a parabolic reversal. Nothing bad about this one. It just didn't work out. A little bit of revenge trading after that, which didn't work out. And then you took the breakout step, and we'll definitely review it. The entry was at the consolidation phase after it broke above the volume price indicator. The blue line is the volume price indicator for you, right? Hello, Adrian. Exit not clear, partial on main levels. Thoughts? Was not sure that you were doing the opening. What you were doing at the opening. Tried to catch parabolic reversal, which didn't work out. And based on the strong volume by price, you decided to get into the long side after that. Alright, let's take a look at it, guys, and let's review the whole price action to make it clear. Let's take a look at the 5-minute chart. INO at the open, I was a little bit long biased on it. I want to take it for a breakout to the long side, and it's making an ABCD pattern in the pre-market, breaking up to 1090 level, and then it just dropping down. Previous resistance acting as support, which I like about it, at least for that moment, right? It's consolidating, trying to hold the previous resistance, and before the market opens, 30 minutes before the market open, it's getting back down into the range. And when a stock is getting back down into the range, what does that mean? It means that the stock isn't really as strong as you expected it to be, or it's not. It might not make the breakout unless it gets back above the pivot point, right? So what's happening here? This is not head and shoulder setup, but it has the same concept of the head and shoulder setup. You're having a stock which made a move from A to B, stock which made a breakout at the D, couldn't break up higher, and it actually broke down into the range, right? So it's not that strong. Here you see that it's trying one more time to actually break out, but unfortunately it can't do that. It gets engulfed, and at the open it just dumps. So I think this area right here, once it broke this level, it wouldn't have been a bad short, because you will have room all the way to this area and then to these pivot points right there. Let's go back to the 1-minute charts. You see the drop actually happened so fast. This was so volatile, and I doubt you'd have been able to catch it, and the risk to reward wouldn't have been so great. 30-cent stop loss on INO, which is $10 stock. It's too much, so yeah, this definitely would have been missed, right? So it's dropping down, and I see that you tried to catch it multiple times for parabolic reversal. I personally would have tried it once, like right here. I would have tried it, yes. It's not a bad entry. The move is clearly parabolic. It did no pullbacks right there, and then it's just getting you stopped out. After this, I would just stop. I might have tried it one more time there, because this, as you know, guys, I don't take parabolic reversals after hammers with a red body, and I don't take them after a shooting star with a white body. So this right here I would have avoided. This right here might have avoided, might not. I think I might have avoided because of the bigger upper wick right there. So yeah, I wouldn't have taken it, even though the risk to reward here would have made it for me. Wouldn't have taken this one as well, close to a pivot point when the stock is weak. And then it's getting interesting. Why is that? We're having a double bottom on the 5-minute chart. So this is a strong reversal pattern. Sorry, not the 5-minute chart, the 2-minute chart. You're having a double bottom on the 2-minute chart, after a consolidation of around 30 minutes or 25 minutes, you're having a clear pivot point up here, and this is where B-Tank took it to the long side after the break of volume by price analysis, right? And took it for the break of that pivot point. So this was a good entry, and if I had have taken this entry, actually no, I wouldn't say that. If you guys take this entry, what would be your stop loss? So let's say we have 1, we have 2, and we have 3. So B-Tank, you used 1 as your stop loss, right? Marcus would have used 3. Kevin would have used 2. Anyone else? Let's make it more interesting. Can you give me a reason why would you guys use that stop loss exactly? So why would you use that stop loss? 3, if it fails, it's most likely reversing this. This is the thought of Marcus. 2, Lenny, it's the level it bounced from. Alright. 1 is so far for you, Jay. Okay, perfect. Now let's go back into the trade on the 1-minute chart and discuss all the stop losses, okay? So look at this, guys. This is the resistance area, right? This is the range. This is the pivot point. So if you are taking it to the long side here, you are getting into the trade within the range. If you are getting within the range, you could expect it to chop around the range for this moment. This is the resistance here. So we could expect it to go all the way up to the resistance, which it did, and then bounce off the resistance, which it did. But do we really know how far is it going to drop after it bounces? If we are long biased, we could be long biased, but we are not sure if it's going to bounce from here, or from here. So the best stop loss in this case, just in my opinion, is the level that the stock bounced from, which would be here, and this is what I'm going to use. After that, 2 things could happen. It either shoots up and you're going to get a 2-to-1 with a huge move, whereas you could actually get way more than that, or it could go up, pull back, continue going higher. You could add to your position, and then you will get a good run out of there, or it will bounce off the previous resistance. Actually, it's 3 things, right? Pull back, bounce from a new level where you could add and move your stop loss. Another possible stop loss is 2. I think 2 would have been decent because 2 is also a pivot point. Bounce 1 time, bounce 2nd time, bounce 3rd time. And since it's close to the breakout area, we definitely don't want it to just come back all the way down there, though it can. But 2 is decent, right? It's it's a little bit far, yes. But it's at least a technical level. It's a point, a pivot point which held the price for multiple times right there. This one is the low of the day, which is definitely the safest. So for me, I would have used 1. 2 could have worked out, not bad. 1 is the little bit too tight in my opinion. And when would we use 1 as our stop loss? Let's say you're getting in here, and I will draw you the same stop losses. 1, 2, and 3. Like in this case, if I get in right there, my stop loss would be 1. Why would it be 1? Because we're getting in at the breakout. And if you are entering exactly at the breakout area, not all the time, but a lot of times at the breakout, it either shoots up or it breaks out, pulls back, previous resistance acting as support, and then it continues the run. So after the breakout, you could use 1 as stop loss. It's too tight, but you could use 2 as well, just to give it extra room if you want. You could also use 3. All of the stop losses in this case are technical, and there is nothing wrong. If you are getting within the range, don't try to tighten your stop loss. Tightening stop loss when the stock is within the range could not be the best idea, because it could just bounce and go against you. Anyway, that was a little bit too much for this trade, right? But I just wanted to get you familiar with stop losses, because it's one of the most important things to master when you're day trading, just to get a good risk to reward. Anyway, let's go for the next trade. Adrian would have used 3 for quick scalp resistance ahead into, yeah, Adrian, 3 and 2, both of them are really good. Whether you use this one and this one, I like them actually both. One would have been a little bit too tight. You could also go for scalps. I mean, yes, you would not go for 2 to 1 or 3 to 1, just get to 1 to 1. But with the technical stop loss, it will be worth it. Okay, let's see what we had there. This is Zach's trade, and that Zach traded a new type of trade I'm working on for my playbook. So Zach, let's see what strategy are you making here. I'm actually interested. I really love when members are seeing something new happening in the markets or something happening over and over in the markets, and then they try to make a strategy out of it, right? We learn from that. Now let's see. You want a stock to gap up or down 3%. You want it to have at least 500,000 shares traded in the pre-market. The moving average and the 1 minute chart going in the same direction. So you want all the moving averages to be sloping up, I guess, right? Or sloping down if you want to take it to the short side. Sideways consolidation going into the open. So in the pre-market, you want it to go sideways. Your entry was in the pre-market. Use the parabolic SR dots as stop. So this is your stop loss. 25% at 2 hours, 25% at 4 hours, and 25% of clear reversal area. And this is good actually. This is a parabolic reversal, guys. 1, 2, 3. Daily level on the way. Reversal candle. After which we expect the stock to just drop. Added at the pullback, but exited when the SAR was crossed. Question, thoughts on my entry criteria? Was my ad okay or should I? Okay, this one I actually can comment a lot about. Now about the entry criteria, we'll also get back to it. So I like this one. This is something similar to Williams harmonious chart, though it's not the same because we didn't have that sideways consolidation on Williams harmonious chart setup, right? Now, I like the criteria of a stock being sideways before your entry point. Why is that? Because you will have clear resistance, you will have clear support. If it's breaking one of the 2 points, it will either shoot up or it will break down. Entering before at the pre-market is something a little bit scary, especially with a tight stop loss. Remember that the open could be so strong, stock could just flash down or open up so fast, right? So you could either get slippage if you are losing, or you could get a good winner. And I don't love gambling. I would save my entry for the open, or I would enter small and add the open. If it confirms my idea, I would add to my position. Now it's shooting up, you're taking partials, which is good. Another good partial. Now the add. You add it because it approached the 9 moving average and 2 minute chart. And I wouldn't really care about the 9 or the 2 minute chart. I like that this add was at a pivot point, which was a previous resistance area. Still, I wouldn't add right there. Remember, having a pivot point, having a moving average, having a daily level is not enough. It's just an indicator. Trading based on that alone is not enough. What I would do is I would wait for it to make a pattern. I know that pullbacks most of the time, not always, but most of the time, when the stock is so extended, are coming back into the 9 moving average in the 5 minute chart or closer to it. If it's not doing that and I really want to add into it, I will wait at least for a W shape just to make sure that the stock is still strong. W shape just to make that the stock is still strong. Once I see that, I would add to my position and go with it. Adding when the stock is dropping down is not really safe for one reason. You don't know what is the end of the pullback. And remember what we said, the least thing you're looking for, sorry about that. Yeah, the least thing you're looking for when you're going when you're looking for a pullback is a new high. The end of the pullback is at least a new high. And that alone is not enough. Adding on the way down means that the stock would make another new low, another new low, another new low, another new low, and you will not just catch it, right? At least a new high for the end of the pullback. And in this case, if it's not touching the 9 on the 5 minute chart and not close to it, I would wait for a W shape. If it's going to the 9 moving average in the 5 minute chart and I'm already in it, a touch of the 9 and the new high might be enough for an add, not for a separate setup. But at least a new high after a huge drop. Okay. the handsome. You're welcome. So handsome traded Apple. You caught an amazing entry on Apple long. I was watching it, I couldn't trade it, and I liked only one entry. I liked the entry around here, not one, and I liked an ad around here. I didn't trade it, but I was just imaginary trading it because of the dash issues, and I was just calculating how much money I'm missing when the trade was going without me. Anyway, so you are taken to the long side there based on a double bottom, pre-market low, and a hammer right here, right? I saw this one and I actually felt that this might be a good long. It was selling, couldn't make it even to that low right there, not to mention that we are having a low down there. Remember what I told you, I don't like reverse ABCD patterns against 1 minute hammers, and since I don't like reverse ABCD patterns against hammers on the 1 minute chart, I might like it actually to the long side against it if it's giving me a good setup. In the pre-market, it wasn't really weak. After the market opened, it's still not really weak. Yes, we're having a bunch of resistance ahead of us, but they're not sloping down. They're just going kind of horizontally, and they're ready to cross. Show a little bit of long bias at the same time to the short bias. You're taking it as close as possible to the support, which is really smart. Because of your early entry and your tight stop loss, you partialed earlier, which is still not bad. And I guess there was an ad here, right? I personally, after this ad, wouldn't have partialed. Look at what we have right there. We are having a low, high, which is strong for now, right? Then we're having another high and a low, which is also showing us that the stock's strong. High and a low, still strong from here, but weak from there. Low, definitely not liking that, right? High, okay, getting stronger. Low, getting stronger. Overall, yes, it's not making like exact higher highs and higher lows, but if you see this, overall, going up with flat resistance and going up from the downside, so it's more strong than weak. Another flat, another low, so it's forming an ascending triangle. You're taking it to the long side. There is setup here. Look at this, we're combining a small setup we like, and this is why I told you guys I liked an ad right here. We're combining a small setup we like with a big setup. So this is how we see a setup on a bigger picture, kind of, and we base it or get an entry based on the 1 minute chart. Ascending triangle along with what's these guys here? Those 3 bars. Yeah, it's the sandwich. This is the bearish engulfing sandwich. The bearish candle got engulfed by 2 bullish candles from both sides. So this is showing us that bulls are in control, and this engulfing is happening at the high of the day or closer to the high of the day, closer to the resistance. Once it's breaking it, you could take it to the long side, stop loss a new 1 minute low, then ride it, and look at what's happening after that. Previous resistance starting to act as support, which is good. You could always add to your position and move your stop loss instead of that's down right there to the new low it's holding, and then just go for the move. That was an interesting chart. I personally wouldn't have taken it, but if there is a daily level there and then a new low, I personally wouldn't have taken it. I'm not sure, but it looks like it worked out really well for you. Would be really interesting to know what you saw right there. On the 5 minute chart, I see 3 candles. It's kind of extended from the 9 on the 5 minute chart, but I don't like horizontal moving averages, because of which I would have avoided it, but still, good job catching that short there. Let's see Hamza. And then we're having DH back. Alright, send me a better one, Hamza. Thank you. Yeah, thank you, Adrian. Actually, because you're on YouTube, your comments are reaching 15 seconds late, unfortunately. But glad to know that you noticed that. Okay, Hamza traded CCL, and that was a 1 minute open range breakout. Let me get the epic pen. How could I lose the epic pen? I found my epic pen. Perfect. So 1 minute open range breakout, and this is not about a 1 minute open range breakout. It's breaking above a horizontal moving average, which is the 200. It's breaking above a pivot point in the pre-market, right? Bullish candle, which is good. You're taking it to the long side. My stop loss would be half of the candle. Remember, guys, if you are getting into a momentum play or 1 minute open range breakout, our stop loss is VWAP at the moment or half of the 1 minute candle. Safer to have it at the low of the 1 minute candle, but that's too much for CCL. So half of the 1 minute candle would be enough, and you would survive the pullback as well, right? So you're taking to the long side, partialing, exiting all out at break even, following your rules. This is smart. I love it. Closer to the support, which is VWAP, it's starting to hold it, and you re-entered. And one thing though, I wouldn't have taken it at the exact level where you took it. I would have taken it on this candle, and I mentioned the reason before. We don't know what's the end of the pullback. It could have just simply made a new 1 minute lower. It could have even on this same candle went back down and then came back up, and you would just be stopped out to the penny before it's working out. So yeah, I would have waited at least for the 1 minute candle to close. Yeah, still worked out well. I like your patience. First partial was a little bit early, but it works out. It's not bad. I mean, I'd have waited for it at least to go closer to the high of the day. Why is that? Just to avoid a double top with the second top lower than the first one. I wouldn't have partialed like so early. If you had taken the entry here, just think of it this way. This is the place where you should enter normally, right? You got a better entry than a normal entry. It's too early for a partial, but I bet for the risk to reward it was good, because this is your entry and this is your stop loss. That's your reward. You definitely got 2 to 1, and you traded really well this one with that partial. But still, think of it this way. You got a really good entry, which is nice, and because of that, you could hold it more than the people who got that here. Imagine if you are getting your entry here and this is your risk, your reward will be somewhere up there. You don't need to wait all the way up there, but you could wait at least a little bit more. Half of the reward of the people who are getting in here. Tough to do that, and I'm not doing that all the time as well. Trading my PNL, right? But just something for the future to work on. Now look at this. This is where I would be a little bit careful. Now this entry is good. This ad, I wouldn't do that. Why is that? You are having the previous resistance. It's not acting as a support. It acted a little bit as a support, but then it actually broke down, right? I'll show you my CCL trade actually. It's dropping down and bouncing, coming back up, which is decent kind of, but what setup is forming right now? What setup could you guys see here? It's not really clear. Not A plus setup. A short setup. Yeah, let's say it's short setup. Exactly, Lenny. That's it. It's sort of head and shoulders. Now it's not exactly a head and shoulders or a clear head and shoulders, but you could say this is the head, the shoulder, head, and the shoulder. So you're getting into the long side before the confirmation that the head and shoulder setup failed. When is the head and shoulder setup failing? The head and shoulder setup failing after the break of the second shoulder. So once this shoulder is getting broken, the setup to the short side has failed, and we could try it to the long side. If it's not failing and this shoulder is holding and it's breaking this point right here, it might actually drop down. Let's see what it did. This is being closed. This is closed. This is closed. And this is advanced trade, to which we'll get right now. So this is CCL. I guess you traded it right there, right? Earlier. That's it. And it did break, right? This level right here, drop down wasn't as weak actually, because it came back up eventually. Yeah, drop down, form a W shape, and then came back up. But what we want to say is this, right? It didn't break the shoulder, did break down, didn't continue dropping down, and this is where I actually traded it to the long side. Why did I take it to the long side here and not here or here? This was my only trade for today. So look at the 5-minute chart. It looks like I'm taking it on the 4th candle, and I'm telling you that better avoid trading the third consecutive 5-minute candle, right? I took it on the 4th candle because it still was close to the 9 moving average in the 5-minute chart, and seeing this, I knew that it's not a parabolic reversal yet. Like literally no reason for it to be a parabolic reversal when it's hugging the 9 moving average on the 5-minute chart. On the 1-minute chart, we did break this level. The next pivot point we have is down here. It didn't reach the pivot point, so it wasn't as weak, right? It tried to break it one more time and go to that pivot point, but it couldn't, so we're having a double bottom right there. Now it's getting back into the range, and when a stock is getting back into the range, it means it's not as weak as it used to be, or as it looked at that moment. If it's getting back into the range after a long, it means it's not as strong as it looked at that moment. Now it's getting back into the range after breaking down without touching the pivot point. I like it to the long side. Look at this. Previous resistance area, which it held to go back to the pivot point, is holding now to go to the long side. Now, at this stage, it wouldn't have been bad long play. I was a little bit concerned about this level right here and about those levels right there. I just wanted to see what it's going to do at this stage. I see that it's making a double top, and at this moment I was happy I didn't take it to the long side here because I was afraid it's making a double top before breaking back down right there. I see that it's actually bouncing off a new level, which is a higher low. Now that's interesting. I'm taking it to the long side, having around 7 cents stop loss on this thing. And then I just hold it all the way to the high of the day. Why did I partial here? We're having a double top right now. I don't want it to just drop down against me. Yes, this is an ABCD pattern, and an ABCD pattern is a breakout setup. But a breakout setup, if it's breaking out something like this or something around there, let's say just went up, pull back, went up, pull back, went up, pull back, went up, something like this. You see that it's getting into the breakout area. I'm definitely not partialing there. When it's making it all the way from down here all the way up there, now this is a huge move. I definitely want to take a partial because I can't just expect it that it will break out with no pullbacks. It did make a pullback, not a huge pullback. Another partial at the daily level, another partial closer to the $19 level we had right there, to the around number $19. Now look what's happening there. You could see we're having sort of a resistance here. So we're having a pivot point. It bounced out of it one time, bounced out of it second time, and a third time is actually a descending triangle. A descending triangle forming against me. And yes, it's at the 9 moving average on the 5-minute chart, but I just decided to exit since it broke this pivot point. It went a little bit in my favor again, but then it just dumped down, and I'm actually happy that I exited out of it. I didn't exit all out. At this stage, I had around 30% left, and I don't want to hold 30% all the way to break even. So I partial 25%, and I have 5% left. 5% is nothing, but I told you guys, always leave at least a small portion of your trade to run just to practice holding. So 5%, I don't really care what's going to happen to it. Either it goes to my break even or it breaks the high of the day. I'm just going to watch what it's doing, and I might add if it's giving me a good opportunity to add. Okay, let's see what Ivan did right there. Ivan traded AAL, and he actually explained to me why he took AAL. If you guys look at the 5-minute chart, we have a flat support down there. It's breaking it for a 15-minute open range breakdown. After the breakout, it's not really weak. It's not making it to the next pivot point right there. It just immediately gets engulfed on the second candle. Does this mean it will be a long here? Not really. I'm definitely not taking it to the long side up here because we're getting back into the range, and I'm not sure what we are going to do right there. It could just make a reverse ABCD pattern, or it could just chop within the range. I want a little bit more confirmation. We want to make sure that this downtrend is done. So we're having a high, we're having a low, we're having a high, which is lower high, right? Which is showing us that the stock is weak. We're having a low, double bottom, second bottom higher than the first one, which is showing us that the stock is strong. So kind of contradictory, right? Strong from the bottom side, weak from the upper side, having another flat high, showing us that it's getting weaker from here, another higher low, showing us that it's strong, breaking up the high, and it's more clear on the 1 minute chart. If you just see this right there, flat resistance, getting to the upside from there, it's taking it to the long side, and then it's just exploding. I guess the stop loss there was really tight. I think he used this as stop loss and he marked it. I wouldn't. It's at the breakout area, which is why you could have used it. Yes, I actually didn't pay attention to that right now, but not on L. I'm not sure I would have used this as my stop loss. I personally would have used this as my stop loss just in case the level it bounced from. And then if it's making a pullback, I would add, which it never did. So basically that would have been my stop loss, and I would have just got my 2 R's somewhere up there because it never did a pullback. Stop as a new 1 minute is not bad. We said that at the breakout area you could use it as a new 1 minute low, but looking at those candles, they're just a little bit choppy, and I would have used both of them. I think still a good trade there, Ivan. Thank you, Hamza, for sharing your trade. I think I forgot one trade. Dustin. How could I miss Dustin? Did I miss this one? Yeah, I missed Dustin's trade. I'll take a look at it now. Codex traded it to the short side first. Let me take a look at NKLA quickly there for a reversal. Not really. It's looking like it's making a bearish engulfing sandwich now, and it's close to the 9 moving average in the 5 minute chart, so it could actually just break up right now, and then it will be the first candle. On the second candle, we don't want to take it to the short side, so it could be, we'd need to at least for 10 minutes for it to make 2 consecutive 5 minute candles before me being interested in it to the long side or to the short side. Anyway, T-chart, I missed yours. I'm sorry. I'll get back to it. So Codex, you took it to the short side and you use this as your stop loss. Now I wouldn't use this as my stop loss. Why, guys? Yeah, I see it's kind of extended from the 9 moving average in the 5 minute chart. You are having 5 consecutive 5 minute candles. You are having a new 1 minute low. You get a bad feel because it was on SSR, and then you are going with the target of the 9 moving average in the 5 minute chart, which worked out. I like everything there, but I'm a little bit hesitant about the stop loss. Where would be a better stop loss? I wouldn't have taken this trade for one reason: the risk to reward would be messed up with the place I want to put my stop loss at. Thank you, Khatri. So for me, I would have used the high of the 1 minute candle as my stop loss. Exactly, Hamza, yeah. Why is that? We always say that candles, they don't just close and open, close, open, close, open, right? They just don't do that. They wick. They go a little bit up, not making a new 1 minute high, and then drop down. Go a little bit up and then drop down. Imagine, not just imagine, you are taking it to the short side here, and you see this wick right here? It was good that it didn't go all the way up there, but it could have just went up, not making a new 1 minute high, stop you out, and then work out. This would happen. This happened to me a lot, and I was hating it when that happens, because a 2R trade or 3R trade was ending up being -1R. Right, so basically, instead of being up 4 R's on a next trade, like -1 plus 3, I'm just ruining a trade having tight stop losses. So the safest stop loss for me is here. And now looking at this is a little bit bad risk to reward for me, so I would avoid it. But even if you use this as your stop loss, you would get a 2 or 2.5 R's all the way to the 9 moving average on the 5 minute chart. Shorting it one more time. What made you short it there? Was it the fake breakout? Double top. So this is decent. These type of entries, I see William actually taking them a lot. If you know William, we're trading together, and he's really good at this thing. And he's taking it not only because of the volume or because of the double top of the double top. He sees something happening on the time and sells and the level 2 there. So the moment it's making a double top or it's breaking above the double top, if he sees a lot of ask, coming in, or a lot of green coming in, he would take it to the short side once it's getting back into the range with kind of tight stop loss, but he needs to see something on the time sales, and I'm not good at that yet, so I don't play these type of trades. Yeah, this is not bad right there. You held onto it also nicely, no early partials with the tight stop loss, all the way to the 9 moving average in the 5 minute chart, and I guess you are still having some. Did it reach your target, Dustin? View up plus target, it's still going on there, right? Okay, I really hope it works out for you. T-chart, let me see. T-chart, I missed that one. Oh, I actually didn't miss it. I'm still going to it. So I'll get DH pack, then I'm going to T-chart. So let's see what you did right there. You traded NKLA. And NKLA, I didn't trade NKLA for one reason. I'm going to explain it as well right now. But it wasn't a bad long after all. So on the daily chart, it's gapping up and you are having this as a pivot point. It started selling off. It definitely wasn't really interesting at that moment because we're having a bunch of pivot points now based on the daily chart on our way. But the moment it clears them, it has a lot of room to go to the long side. This is what we see on the daily chart. On the 5 minute chart and the 15 minute chart, this is the price action which I don't like to see on stocks. I don't like to see stocks going or making most of the move in the pre-market. From 34 to 54, $20 move. When I see this happening, I just believe that most of the move or the clean move has already happened in the pre-market, and I'm not interested in taking it to the long side unless it's making at least 50% pullback. At the open, when I was watching it, it started selling off. I'm definitely not taking it to the short side, but I'd be interested in it if it's making 50% pullback or more, and that's what it did. It did a 50% pullback, which made it actually interesting to the long side around here. Still, I didn't take it to the long side there for one reason. We had a clear pivot point here. It did break it, and now if I take it to the long side here, it could just bounce out of that pivot point. If it passes it, it could get back into the range, chop around the range, or maybe just drop after that, making a reverse ABCD pattern. So it wasn't clear at that moment as well. What DHPAC did is he waited for it to break this pivot point up there, because if it's breaking it, the only thing which we'll have above us now is the $52 level and the daily level he had at $50 right there. So this is good. Now let's see how you picked your entry based on the 1 minute chart and the 2 minute chart. You actually didn't wait for a pullback, right? You just took it on the way up. Now this is something I wouldn't have done, and to make this setup perfect, you see what you want on the 15 minute chart, you see what you want on the 5 minute chart, you see what you want on the daily chart. Now you need to pick a good entry based on the 1 minute chart and the 2 minute chart. Taking the entry once it's breaking the pivot point could work out, but we don't know where to put the stop loss at. For now, the level which the stock bounced from is this, right? So basically, I would wait for it to pull back, have a better stop loss. Now I see where it bounced from, either here or wait for a W shape somewhere right there, get into the position and then go for the move. I think he played the break of the high of the day after that. He went for the break of the high of the day there and then the break of the high of the day. So yeah, I like everything you did about this setup. One thing I would have done just to be safe about this one is waiting for a pullback just to know where to put my stop loss at, because at this moment if I get to the long side there, I wouldn't know where to put my stop loss at. It could just pull back here, it could pull back on the very same candle, it could pull back a little bit after, and having a stop loss at a new 1 minute low is not really technical. It just going up, it's far from the 9 here, it's far from the 9 here. We can't just pick stop loss randomly. Stop loss is the level that the stock bounced from if we are going with a trend or it's a new 1 minute low after a breakout, if that breakout is happening after a long consolidation. I don't use my stop loss at new 1 minute low after the breakout. If the stock is making a huge move like this, then it's breaking out, I wouldn't take my entry right there and put my stop loss at new 1 minute low. I mean, that's just with my style, and this style could be wrong, right? Key chart. let's see what you did. Traded Uber. And you tried it for a parabolic reversal, I guess. Then get stepped out and then you re-enter. So the first entry, I wouldn't have taken it, definitely, for one reason. First of all, let's take a look at the 5-minute chart. On the 5-minute chart, it is not, I wouldn't say it's parabolic, guys. No, I just added new rule for my parabolic reversals. I don't only look for them to be extended from the 9 and the 5. I want them to be parabolic. When just making these kind of moves right there on the 1-minute chart, you see it's going a little bit to the upside, pulling back, upside, pulling back, upside, pulling back, upside, pulling back. So basically just taking its time to go to the long side. There are a lot of fake new 1-minute lows, and I'm not sure if this new 1-minute low would actually work out. This is the first reason. The second reason, 2 bigger lower wicks right there. Another reason, I would have avoided this one. This right here is interesting for this. And you mentioned it. Climactic volume at the high of the day with the fake breakout. So it consolidated for around 15 minutes. It broke up after the consolidation and it immediately got back down into the range. So this right here, it was decent. Before that, it was just fake lows, right? With it taking its time. Even here, it wasn't parabolic, but at least you had some other confirmations for reversal. A fake breakout and increasing volume plus a new 1-minute low with the stock making a huge move with no pullbacks at that moment. Target the 9 moving average in the 5-minute chart, then it just continues the move up there. I guess you flipped it to the long side. Now this is smart. Look at this. What did the teacher do there? Stock is going up, pulling back. Look at this. This is the first low. It's going up and this is the second low. So we're having a W shape right there. Because of the W shape, took it to the long side, stop loss down there, and then partial all the way up. So you played the pullback for the ABCD pattern, and then you played the continuation for the ABCD pattern. This is amazing. NKLA is making a reversal. Let me take a look at that. Yeah, I see that. Yeah, NKLA is looking interesting. It could actually drop around here. I'm not going to trade it because I'll be just watching the trade closely. If I'm taking it right here. Let me just finish the trade review better. Alright. Look, let's see what you did there. So Lou traded work. And you took it to the long side, I guess ABCD pattern W shape, Lou? Or you had something else in mind? Yeah, ABCD pattern W shape. So you are having an A, B, then you are having a parabolic pullback. After a parabolic pullback, we guys don't want to take the first new high. Why is that? Because we are afraid that the stock might make a reverse ABCD pattern and drop down. Because of that, we want to make sure that this reverse ABCD pattern is going to fail. And this is it, the confirmation that it might start be failing. You're getting increasing volume, but that's late. You're having a good candle at the low of the pullback, which is a hammer and then a hammer. New 1-minute high, taking it to the long side. Stop loss at the low of the second wave or at the low of the first wave. You can choose, both of them are really good. I would choose the low of the second wave just to have better risk to reward. And then not a bad partial, closer to the pivot point around the bodies. Another partial, which is not bad. Adding to your position. Not bad place to add as well. This area right here, the average of this level, once it broke it, after the breakout with the volume, I personally wouldn't have added right there because I'm not confident with going after red candles. Now that's really something good to do, and guys, if you can practice that, especially if you are in simulator, I would really encourage doing that. Try to add on pullbacks, but after you see a setup confirmation. So you saw that the setup worked out here, it did break out, right? And then after it's dropping down, whether you enter here or you enter here, there is no difference. It is at the breakout area. This is the technical stop loss. Instead of waiting for it to go up and then get a bad fill, just get in as close as possible to the support. If you can do that, that's amazing. This is totally something nice to do, and I really want to do that, and I work on that. But I developed a habit over 2 years of trading. After a new high with the candle confirming my direction. Sometimes that's good, but sometimes it's not worth waiting for the candle to give you confirmation when you have all the confirmations before. And you had level 2 and diamond sales confirmation. Okay, that's good. Yeah, this is a really good trade, Lou. Good job. Now let's see what Dell did. Dell traded CCL and took it to the long side. Now this entry right here I would have avoided. Why is that? Selling pressure weak, and a new 1 minute low. I'm not sure if this is the end of the pullback. It could make a new 1 minute low, right? So in this case, I wouldn't get in as close as possible to the support. I would wait for the confirmation. Unless you see something on the level 2 and the diamond sales, which I can't see right now because I'm just reviewing a picture there, right? Or a screenshot. Now, I love how much you held onto this one. Now, your hold was amazing. All the way to the previous day close. And then you took it to the short side at the same time. That's actually nice. Alright. Now, for a short... Oh, you see that? The 1 minute candle. The 1 minute candle bouncing of 1865. I guess that was the high of the day. Dropping down as a shooting star. Pre-entered it. And I bet your entry was the last few seconds before the candle closed. So you are taking it to the short. And look at this. This is, guys, how you just use what we... the other setups which you don't trade, if you don't trade them, as confirmations for your exit. So Dell took it to the long side here. It went in his favor. Now he's seeing a setup forming against him, and that setup is a parabolic reversal, right? Stock is extended, 1, 2, 3, 3 consecutive 5-minute candles, reversal candle at the high of the day. He knows that there is no reason for him to hold on to his winner trade. Just exit all out and use that setup instead of hoping for it to bounce off the 9-moving average in the 5-minute chart. If he's waiting for it to go down and bounce off the 9-moving average in the 5-minute chart, that will happen for a little bit, but not so much, right? Eventually it just drops down. When the stock is really strong, it would bounce and continue the uptrend, but we can't really hope for that to happen every time. That's why he just exited all out instead of hoping, took a new position with a really tight stop loss and made the same move but to the downside. Now that was another short ad, and that short ad was the ad which we actually talked about, guys, right? Sort of a head and shoulder pattern, which is not a perfect head and shoulders pattern, but we see a clear pivot point right here. It's breaking it, and you use that break for an ad to the short side, which is also a good ad. And then you're partially done. They'll make sure to submit this trade to the trade of the day. I think it's really good. I like the patience to the upside, to the position on the long side. I like how you shorted it for another setup, and the ad at the break of the pivot point, everything there was so technical. One thing, I would have just held on to this short a little bit more because this was a quick move, and after it's breaking down, it could reach the second pivot point, right? So you would either take partial down there, or you would exit once you confirm that the setup to the downside is not working because of the double bottom. Other than that, you managed it really well. Lenny, let's see what Lenny traded there. I'm not sure what that, I'm not sure if we are allowed to share trades in simulator. I don't know, I think that's something to ask Norm and Peter. Peter, if you know, is it allowed to use simulator trades for the trade of the day? I mean, anyway, whether it's simulator, whether it's live, I really like that trade. As Mark said, it still was a good trade. Just keep practicing that, and you'll eventually trade the same way when you are live. CCL, I actually remember this trade. No, I don't remember this trade. Yeah, actually, we do remember this. This is from today. I just see something familiar and something not familiar. It's just the candles are looking a little bit different here. But like, this was a good open range breakout. This was a really early partial. And I bet Lenny, your stop loss was here, right? It was really tight. Was it? Yeah, exactly. So in this case, I wouldn't use that tight of a stop loss down here. Yeah, thank you, Peter. It must be live, I guess. Yeah, that makes sense, actually. So stock is going up, pulling back, coming back up, pulling back down one more time. So look at this, we're having a low, we're having a high. Now we're having a lower high, but we're having a higher low, right? Another higher low. So it's strong from the bottom side, weak from the upper side. However, on the bigger time frames, it's still strong. It's above the moving averages, breaking the 200 moving average right here. And once you are taking it to the long side, the only thing you have above you is this pivot point and this pivot point, nothing other than that. It's also an ABCD pattern with a W shape. Thank you, Lou. So perfect entry, I love that. Little bit early partial, but I like how much you held on to this trade after the first partial and started partialing closer to the high of the day. And look at this, Lenny did the same thing actually, right? Did you take that one to the short side for a parabolic reversal? Oh, you didn't do that, right? You went all out. Still, not bad. That's still actually good. You're taking it to the short, you are exiting all out right there because you saw that there is a setup forming against you, right? You don't really need to take that setup because you see that, but you need to put that into consideration. You see a parabolic reversal forming against you, then just exit all out right there or take the biggest partial out there. Now you are adding to your position right there, which is not bad. Again, because you're having sort of a W shape right there. What I don't like about it is it getting back down into the range. What I would have waited for is it to break the shoulder for me to add to the long side. As long as it's holding within the range, I might either take it to the short side after the break to the downside, to the long side after the break to the upper side, or do the same thing you did. If you're really long bias on it, get into the long side, but as close as possible to the support, which you actually did. That's still a good thing to do. Hey Ivan, I actually did review your trade. This live trade review will be uploaded to YouTube. It's just recording now right there, so you'll be able to take a look at it. Thank you. Could you check SPAQ? Yeah, let's take a look at SPAQ. We have 7 minutes and we're done with the trades. So let's see what SPAQ is doing. So I still have 5% of my position, which is nothing, but I'm going to hold on. This would have been a bad place to add. Going up, sort of a bearish engulfing sandwich, new level it's holding, double my position right here. I could actually even quadruple it, and I'll have 20% of my remaining position, but yeah, no problem. Let's see SPAQ. Now this is good. One thing though, I think this one had news. I bet this move right here is not caused by just a break of resistance area. This is definitely news. So it's breaking out, it's extended from the 9-minute average and the 5-minute chart. Candles are so big, they're not giving me good risk to reward, so definitely not shorting it, and I'm definitely not long in it yet. Can you please see CIAN? Oh yes, Lynn, CIAN. Lynn actually asked us something right at the open, and his question was, let me get back to it. I was trying my first extreme reversal break of the trend line on CIN at 1109. I found it on RSI extreme scanners, bought it at 42.57. Let's see, that was 1109, right? And you tried an extreme reversal. So for an extreme reversal, we need a break of the trend line. If we draw a trend line right here, we need a break of the trend line and establishment of a new trend. It did break the trend line here. This was the trend line if you just look at it clearly, right? It did break the trend line, but remember, after the break of the trend line, what do we want to see, guys? We want to see an establishment of a new trend, which didn't happen right here. What's an establishment of a new trend? A new wave supporting the direction after the trend line was broken. That would have been an entry. Now here, it did break the trend line, but it did exactly what we said on the webinar, offering us a better entry point to the original direction. So yeah, this wouldn't have been a really great extreme reversal for me. You're having a new 15-minute high, which is good. You're having a break of the trend line, which is good, but you don't have that point where it actually establishes a new trend. I discussed this one in the extreme reversal webinar for lifetime members, so you can take a quick look only at this part for it to be really clean. Does the daily bother you? Yes, actually the daily is also weak. I'd definitely not go for a reversal all the way to view up and above because of the daily chart. I see that there is buying pressure right there, so it wouldn't be bad for a reversal, but not hold it all the way to view up. Maybe like here, look at this right here, it did break the trend line and it did establish a new trend, which is a double bottom, the second bottom higher than the first one, new 30-minute high, new 15-minute high. You could take it to the long side, but in this case I wouldn't just wait for it to go to view up. I would be taking partials all the way up because of the daily chart. If this thing gapped up and intraday it sold off and then I'm taking it for a reversal, I would be patient holding it all the way to view up. Since the gap is to the downside and it's weak on the daily chart, I'll just be taking partials all the way up without waiting for it to hit view up. Alright guys, that was it for today. Trade safe, be patient. If you have any questions, I will be in the chat room. And you can always email me at ayman@beatabletraders.com. Guys on YouTube, thank you for being here. I'm typing my email. If you have any questions, feel free traders.com to email me. Have a good day everyone, and I will talk to you later. Thank you everyone.